So February was very disappointing for Bitcoin.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. PlanB and his insightful team dive into Bitcoin analysis March 2025, unpacking market trends, price forecasts, and blockchain developments. Experience their approach, watch and uncover the secrets of tomorrow's crypto landscape.
So it seems like the traditional finance guys don't have the guts to wait for these big 80% RSI 80 plus moves. Well, we'll see what happens. Look at the 200-week moving average. The black line is at 45 in February. That's up slightly from 44 in January. And that's the good news. It's still up. I mean, the 200-week moving average always goes up, and that's still the case. But the bad news, of course, is it's a very low increase. And that is very unexpected because if you listen to my last video, I expected this 200-week moving average to curve upwards to see the increase in moving average getting bigger and bigger. And that's not what we see. We see the increase getting lower right now. So that's something to be looked at later, but we keep an eye on it. Realized price, 2-year realized price. So that's the cost base, the buyers of last 2 years. It's a gray line. The bad news there is it's unchanged at 74,000. So again, I expected, like every bull market, that this realized price line would increase sharply. And here too, in every bull market, the realized price increases sharply. Right now it's unchanged. The good news, of course, that Bitcoin at 84,000 is still above the 2-year realized price of 74,000. And that's like every bull market. This 2-year realized price serves as a bottom, as a floor, if you will, and Bitcoin will be above the 2-year realized price until it drops below, and then, of course, the bear market starts. So the good news is we're still above it, and let's see what happens next month. Now, stock to flow target. My target is still this 500,000 for average, right, for the 2024, 2028 halving cycle. And of course, it's not a point estimate. It has some uncertainty around it. So there's a range of about 250,000 to 1 million Bitcoin.
The crypto market is up today as investor sentiment improves and macroeconomic events create a risk-on atmosphere. After a significant sell-off that pushed valuations to their lowest since November 2024, global crypto market capitalization rebounded to over $3.10 trillion in the last 24 hours. Top cryptocurrencies like Bitcoin and Ethereum surged, each recording gains of around 5.6% as renewed optimism takes hold. A key factor fueling today's rally is the delay of auto tariffs on imports from Canada and Mexico. U.S. President Donald Trump paused the proposed 25% tariffs, which had sparked fears of a trade war and unsettled global markets. Productive discussions with Canadian and Mexican leaders eased investor concerns, allowing crypto prices to recover. Meanwhile, the broader stock market enjoyed similar gains, with major indices climbing as risk sentiment returned. Analysts now see a technical rebound forming that could signal further upward momentum, as easing macroeconomic pressures and increased digital asset demand set the stage for renewed growth. Investors remain cautiously optimistic, expecting steady, robust long-term growth in the dynamic crypto realm.
Bitcoin dropped to $84,000. That's minus 15% from the 102,000 in January. So the reason for this drop was the Bybit Ethereum hack, $1.4 billion in Ethereum's stolen, and that spooked the market. But of course, it had little or nothing to do with Bitcoin. Anyway, the minus 18% dip is a big dip, but it's not unusual for Bitcoin. Bitcoin is very volatile. Even in bull markets, we can have multiple dips that are 20 or even 30% minus. However, it was still an unexpected dip. I expected more all-time highs after January all-time high, and I expected February to be an all-time high as well, above 102,000. So we're really at the crossroads right now. Either we'll have a red-hot bull market, a continuation of the bull market, or we enter the distribution phase into a bear phase. So what will it be? I don't know. That's a big question. Was this the top? And is this dip the start of the bear market? Or will we see a V-shaped recovery and more bull market action? And of course, we have seen a couple hours ago the beginning of a V-shaped recovery following the U.S. Strategic Bitcoin Reserve announcement. But that was, so we recovered about 10% of the minus 80% drop. But we have to see how that will follow. If we look at relative strength index, the RSI, it was also down to 63. 63 is green, so that's this green dot. Down 13 index points from 76, orange, last month. So the good news, of course, is that 63 is still above 50, and everything above 50 is uptrend. So we're still in an uptrend. But the bad news, of course, is I expected more or finally RSIs of 80% plus and red dots. That was the expectation. We didn't see that minus 18% return. So a RSI of 63. What seems to be the case, I'm not sure, but it looks like it, that the normal range of the RSI for normal assets like stocks or the dollar euro rate, the normal range would be between 30 and 70. So everything above 70 is overbought and will revert back. Everything below 30 is oversold and has a possibility of going back. So with all the traditional finance guys moving into Bitcoin, ETFs, etc., I think they are a little bit spooked by RSI of 70 and 76, for example, that we saw in January. So it looks like they sell every time that the RSI is above 70, 75, and then they're hoping or waiting for an RSI, a normal RSI range, so 30, and of course, Bitcoin has never had a RSI at 30, and then of course it bounces back. But
Solana Labs co-founder Anatoly Yakovenko voiced strong concerns about the U.S. government's plan to establish a strategic crypto reserve. Yakovenko argued that putting government in charge of digital assets would kill the decentralization that is core to cryptocurrencies. The proposal, announced by President Donald Trump on Truth Social following his January executive order on digital assets, includes 5 major assets: Bitcoin, Ethereum, XRP, Solana, and Cardano. With the White House Crypto Summit scheduled for March 7, the debate has intensified among industry leaders and market participants. Yakovenko warned that government control over these assets would undermine the trust and innovation that decentralization brings. He stressed that if a reserve were necessary, it should be governed by clear and objective criteria that preserve the integrity of each digital ecosystem. He noted that Solana's ecosystem is robust enough to meet any fair standards set for inclusion without sacrificing its decentralized nature. Adding fuel to the debate, crypto journalist Laura Shin reported that Ripple allegedly advocated for Solana's inclusion to boost XRP's credibility. Entrepreneurs like Joe Lonsdale and Austin Campbell have also voiced concerns, arguing that such government intervention may lead to economic instability and hinder market innovation. As the conversation continues, many remain cautious, emphasizing that preserving decentralization is essential for the future of crypto. Critics argue that government-managed reserves risk erasing the innovative spirit of decentralized finance. They believe that maintaining independence is absolutely vital to protect investor freedom and encourage continuous development within the crypto community. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.